metal pack also, which have seen quite a lot of a cut. So let's do one thing. We'll discuss the markets right now and all of the sectors that you can bet on. Swati Kulkarni, Executive Vice President and Fund Manager at UTI Mutual Fund, joins us now. Swati, in fact, Sumera, you were telling us this manages India's oldest equity fund.
Yeah, that's right. The UTI Master Share Unit Scheme, and that has a vintage of 35 years. So they've seen many business cycles. Swati, thanks very much for joining in. It's a large cap fund, right? And the performance has also been quite good. But Swati, the issue now with large caps is, and currently given the volatility, all portfolios are large cap oriented, right? I mean, even a lot of these individual names have large cap oriented portfolios. But this concern around shrinking alpha is just not going away from the large cap space. So what is the outlook for your own fund? And do you think that over the next, few years, the investor who's investing currently in these active large cap funds is going to increasingly try to move towards an index fund? I mean, what is holding investors' fancy in an active large cap fund today?
Yeah, thanks, Samaira, for having me here today. Actually, you're right. In the current scenario, what you said is reflected that the alpha is not there. Probably we are lagging index. The best performing fund also is lagging index by a few basis points. But if you see the long-term performance of the large cap funds versus the index, definitely there has been a case where the alpha has been generated. There could be various reasons why in a short period of time the alpha may not be visible. One is, of course, that the strategy or the investment philosophy that a fund manager follows may not, certain stocks or businesses may not fit in. For example, in our case, the low ROC businesses or the businesses which are more managed as a diversified structure rather than, appointed a direct exposure. We have actually preferred to have direct exposure to those businesses which we like in terms of their long growth runway or in terms of the, the pricing normalization that could happen. So we have preferred those kind of businesses. Probably, I think in long run, these businesses are likely to do better and a much improving ROCs is what we can expect. So it is in short term, it is very well possible that certain stocks may not fit into the strategy and you may lag. But as I said, there is a case for actively managed funds. I would also say from an investor's choice perspective, passive will also be, competing. They will compete with the actively managed funds. And passive really makes sense for one's portfolio when they have a view on the market and they don't want any fund manager related choice of stocks in that short period of time. Probably passive does have a say. And on our part, like UTI Mutual Fund has been introducing various smart beta passive strategies as well, which could tap this demand which is there from the investors for passive funds as well. So I think both will coexist and long-term alpha creation opportunities have been there. MasterShare has proven that in the long term. As you said, this fund is in 36th year of its management. And if you see since inception, the returns have been 10 lakhs invested is about 18 crores and versus benchmark of about 12 crores. So there is a 6 crores extra alpha absolute amount generated over these many years. So a small increase in terms of or small alpha over many years actually works wonders, and it can actually, the compounding effect itself can show a much higher wealth.
All right, Swati, that point is taken. I was taking a look at some of your big holdings and a lot of them are financials. In fact, I think financials contribute around 34% of your total as well. Do you think this is still, if someone is putting fresh money into the market, do you think at these levels also the financials still look good? Because we have seen quite a run up already.
Yeah, so first of all, it's a portfolio. So, when I give my view on financials, it's not a sector it is not a solicitation for a sector related investments from an investor's point of view. But from a portfolio perspective, financials does make a sense at this point of time because, if you see the balance sheets have been much more cleaner. The NPA ratios were hovering around 6% in 2018. Now they are down to about 2%. And our preference has been to low-cost, low-cost funds, banks which have strong capital adequacy. And we think that these are well positioned to capture the credit growth. And valuations, if you consider the, the growth opportunities and the rising return on assets that these banks are likely to report, valuations are not that high as well. So our preference has been there for such companies.
Swati, where do you stand in the entire IT sector? Never before has the street been so divided about the prospects of IT. You have clear bulls and you've got clear bears. And, everyone's not convinced that the recovery in margins is going to be substantial in the next, 2 years or so. And valuations can get back to the levels where they were. Your thoughts on IT as things stand currently?
Yeah, so Rima, I would say that we were in the bulls camp as early as from 2017 onwards, and the fund got benefit out of it. But I think somewhere during last 1 year, in fact, the possibility of this sector facing slowdown challenges in terms of the clients facing or postponing the demand, we have turned more of a neutralish, and we are neutral because if you look at the characteristic of this sector, whether it in terms of the high return on capital employed or in terms of the cash flow generation, we really like that. And valuations have corrected from the peak, that what we have been discussing, the margin pressures perhaps are behind us. The attrition has been coming down, though still it remains high. I would say that companies do have margin levers. There could be options for some pricing arrangements, and then there are some company-specific things that in past their costs have been higher, and as they ramp up the large deals, and the revenues also start to flow in a higher proportion, you could see margin tailwind coming from those also. So I would say that IT, we are neutral at this point of time, but yeah, we are probably, hoping that the digitization or the need for, moving data on cloud and we having top-notch user experiences is universal. And there is a structural need of technology to be imbibed by many clients, and therefore it could be at best postponement of demand and not necessarily loss of demand.
Postponement of demand and not loss of demand, that's what is currently besieging the Indian IT space. Swati, thank you very much for joining in. Need to get you